Welcome guys. So in this video I'll be talking about the difference between liquidity and inducement. So kindly watch this video to the end because it will be very helpful to you so you won't get caught out next time when you are trading. So join me as we dive in. Now let's talk about liquidity first. What is liquidity? Liquidity is just basically markets that are sitting at the turning point of the market. Liquidity, let me take it again. Liquidity is just basically money that is sitting at the turning point of each market. So anywhere you see higher highs, higher lows, higher highs, higher lows, those are liquidity because investors has invested their money at that particular price of the market. So let me give an example with the chart now. So now we are on GBP/USD, and then if you see a market that is moving on an uptrend, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is what we call liquidity. All these are called liquidity. All these turning points are called liquidity. So you should know the difference now between liquidity and inducement. While inducement now are trap. Inducement are trap which traders do fall into. So let me give an example of that. So if a market is still on an uptrend, and then you see a chart like this and market fails to break the previous high and then still comes back, some traders will think that market will tap into this other block here. Maybe if there's another block there, tap into this other block before moving to the upside. But no, this is just basically a trap, inducement. So market will either pull back to this zone or pull back down to this zone entirely to still collect investors' money. Remember I said liquidity are money which are sitting on the market at every turning point. So this is what we call inducement. So you just wait for a particular full pullback to the turning point of each zone before moving to the upside. So now I'm going to give an example on the chart. So let's go into the chart now. So now this is a fresh chart now on GBP/USD. So I'm using a higher time frame because I basically swing and sometimes I basically scalp. So now what was I saying? I said liquidity now is a turning point in every market. So let me explain that now. So every turning point at each zone, let's use this. Every turning point now in the market, this first, this zone, this zone, this zone, this zone, all these zones are basically turning points in each market. So anywhere you see higher highs, higher lows, higher highs, higher lows, those are liquidity that are sitting in the market. And then now let me give an example of inducement. Now you see what I'm talking about fully. So let's just take these charts for example. Let's take these charts and then want to take a trade. So now we know that the market is moving on a downtrend, creating what? Lower lows, lower highs. Like this, lower lows, lower highs, lower lows, lower highs, lower low, lower high, like that. So now market has broke this previous low and then we are looking for a retracement to the top side, which is the turning point at this zone. We are looking for a retracement, so we're looking for a sell zone at this point to tap into this zone before pulling to the downside again. So now let's do that. So let's do that now. So when we now get this particular scenario in the market, first thing you should do is to identify your breakout structure, which our breakout structure is at this level here. This is our breakout structure. So next, what you should look for is the origin that caused that breakout structure, and then this is the origin that caused that breakout structure. So we'll now take, let's still use our trend line to mark this this last candlestick that caused the breakout structure, which is the origin. So now what are we looking for? We're looking for inducement. Remember I said inducement are traps in the market in which traders do fall into, and then okay, let's just take it as early sellers in this scenario now. Early sellers. So what you should do is you are seeing that there is a particular liquidity, which is liquidity inducement at this level. Liquidity inducement. So let's make it dotted. Let's make it dotted. So this is a liquidity inducement at this level, and then we are looking for a sales. So we are expecting market to tap into this zone, clear this liquidity inducement, tap into our zone, and then move to the downside. So let's watch how this market plays out. Let's use our sell. The next thing you have to target is the next turning point. Remember, each turning point is in the market are liquidity. So the next turning point you have to target is the next liquidity you have to target is the next turning point, and then the next turning point in this pair is this zone here. So our take profit should be at this zone. So now let's watch how this market plays out in this scenario. So we have been tapped in, and then let's see how this plays out. Beautiful, very, very beautiful. So if you watch now, market stopped out early sellers, which was our inducement that was supposed to be cleared before tapping our zone, which was the last candlestick before the impulsive move to the downside, and then move to the downside. So if this video helps you, so you can just like and subscribe so that I'll drop more like this. Thank you.